Ladies and gentlemen, we will now begin the question and answer session. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star 2. Your first question comes from Alicia Yap with Citigroup. Please go ahead.
Hey, thank you. Good evening, management. Thanks for taking my questions. My questions is on the latest hot topic. So we have seen DeepSeek gaining a lot of attention lately, and Baidu recent announcement for the open sourcing the upcoming Ernie 4.5 series and also making Ernie bot for free. So could management share with us the strategic thinking behind this move? And also, how do we view the current competitive landscape of the foundation's models? How does Baidu plan to stay ahead of this evolving market? Thank you.
Hi, Alicia. Let me answer your questions. The Gen AI and foundation model market is still nascent, but moving at a very fast pace. The DeepSeek success story will certainly accelerate the adoption rate of foundation models. As foundation models become more accessible and affordable, I believe we are entering a truly transformative phase. We will see an explosion of new AI applications and use cases that will open up incredible opportunities and push the boundaries of what's possible with AI. One thing we learned from DeepSeek is that open sourcing the best models can greatly help adoption. When a model is open source, people naturally want to try it out of curiosity, which helps drive broader adoption. Ernie 4.5 will be our best models ever, and we would like to have our users and customers try them out more easily than before. So our decision to open source Ernie 4.5 series is also backed by our deep confidence in our technology leadership. This conviction stems from our decades-long commitment to R&D investment, our continuous technological innovation, and our unique position as one of the few companies worldwide with full-stack AI capabilities. Ernie has already demonstrated strong market traction with daily API calls surging from 50 million to 1.65 billion in just 1 year. So through open sourcing, we believe more developers and users will recognize Ernie's true value, driving even broader adoption and expanding its impact across more scenarios. Similarly, making Ernie bot free will enable more users to compare our foundation models with other models on an apple-to-apple basis because they don't charge. Last time we had a major upgrade of Ernie was in October 2023, so it's a long time ago. So stay tuned for Ernie 4.5 in the next couple of months. Having said that, I want to emphasize one crucial point. No matter open source or closed source, foundation models become truly valuable only when they can effectively address real-world problems at scale. We have been committed to an application-driven approach in continuously iterating Ernie. With this mindset, since launching, we have been using Ernie to renovate our products while serving enterprise customers. Internally, we've leveraged Ernie to successfully transform our consumer-facing products like Baidu Search and Baidu Wenku. Externally, through our mass platform, Qianfan, we are enhancing the model and application development experience for enterprise clients. Ernie's industry-leading capabilities in instruction following and state-of-the-art retrieval augmented generation technology, minimizes hallucination, have enabled the wide adoption across various scenarios. And Tianfan's comprehensive tool chain allows our customers to customize any model for their own application scenarios. Going forward, we plan to accelerate Ernie's iteration based on the performance improvement and cost-cutting potential. We will continue evolving it in areas with the greatest potential for real-world impact. We are excited about the new chapter of AI development, and we look forward to seeing AI technology bring more groundbreaking applications that have lasting value for the society. Thank you.
Thank you. Your next question comes from Lincoln Kong from Goldman Sachs. Please go ahead.
Thank you, management, for taking my question. So my question is about the search business. So following recent quarters of search revamp, so how should we think about the future adjustment or changes? So what's the current mix of the Gen AI result, and what's our target mix? And also, as the AI integration continue to deepen, could you share more color around the user metrics? Given that AI chatbots such as DeepSeek and Doubao are also offering search capability, so how do you view the competitiveness or the competition dynamics between Baidu search and those AI chatbots? Thank you.
Hi, Lincoln. Let me answer questions. And currently, around 22% of all search result pages have contained the AI-generated contents. However, there is much more going on behind the scenes. We have fundamentally transforming search, making it more powerful and efficient than ever before. And same as Robin said in the prepared remarks, with Ernie, we have expanding the search beyond text and links to offer diverse content formats, including short videos, live streaming, agents, notes, and short plays. And these different formats can be dynamically combined to create a personalized search experiences. As we continue to transform search, we also are developing the capabilities which allow for the deeper personalizations, adapting to each user's habits and preference. And our efforts have led to the better user results. In January, we can see that among monthly active users who conduct a search on Baidu app, 83% engage with the generative AI content. What's even more encouraging that is in December, the search queries per user on the Baidu app grew by 2% year over year. We focus on continuously improvement in user experiences, expanding the AI's role as we see increasingly positive user engagements. Building on this, let me share a small case of how Ernie agents can create values for our advertisers. During this past Chinese New Year holiday, while many small and medium enterprises are closed for 1 week, and customer demand in certain industries actually peaked, our Ernie agents effectively bridge this gap. For example, a hearing aid company saw increased inquiries as a family reunited and check on elderly parents' health needs. But their own customer service team actually were away because they're on holiday. Through the Ernie agents, we help the company effectively identify and qualify the highly relevant sales leads, enabling them to efficiently follow up and serve their customers seamlessly, even with a reduced team during the holiday. And regarding your question about AI chatbots and search, we believe that we are still in the very early stage of the AI revolution driven by the foundation models. Whether it's AI native chatbots like DeepSeek or our AI driven products, this kind of efforts And these all represent different ways to explore AI's potential. As the leader in China's search market with hundreds of millions of users, we maintain agility and holistic market view by embracing the best innovations and incorporating the truly innovative AI features. We continue to pioneer AI transformations, enhancing the search experiences for our massive user base. Also, search by its nature is deeply rooted in language and text understanding, which aligns perfectly with the large language model capabilities. This positions us well to lead in the AI-empowered search transformations. We believe search is evolving into an integrated platform that goes beyond the AI chatbots, and one that not only provides the smart answers, but also guides users through their entire journey, from finding answers to providing in-depth analysis to completing tasks, and ultimately to delivering the comprehensive services and solutions. While AI chatbot represent an important but early phase in AI application development, the killer app today has not yet emerged. And for us, the key is to maintain this rapid and determined pace of the AI transformation, focusing on discovering what users truly need and want from the next generation of search. Thank you, Lincoln.
Thank you. Your next question comes from Alex Yao from JP Morgan. Please go ahead.
Hey, management. Thank you for taking my question. So could you comment on core ads growth outlook for first quarter 25 and full year 2025? What are the macro assumptions you made underlying these online ad outlook? Has the advertising business truly bottomed out in 4Q24 and started to recover? Lastly, what are the potential opportunities for monetizing Gen AI search, and what is the expected timing? Thank you.
Thanks, Alex. This is Julius. Let me answer your question. Yes, we are seeing the different kinds of the stimulus policies rolling out in the past few months, and like the monetary easing, fiscal stimulus, and trading policies. And while we believe that these measures will eventually benefit the economy, and they need some time to flow through. Given that our advertising business is highly correlated with the small and medium enterprises who are particularly sensitive to macro conditions, plus this persistently challenging competitive landscape, and we haven't really seen any improvements in Q4 yet. Despite near-term pressures, our efforts to transform search with foundation models are progressing steadily, and we believe that these AI transformations will continue to enhance the user experiences and create new opportunities. This quarter, we further deepen the AI transformation of search, and we are seeing encouraging improvements in user metrics, as we talked about in the prepared remarks. And we believe this will help drive revenue growth and open new monetization opportunities in the long term. Also, we haven't started monetize our AI-generated search results at scale yet, which is around 22% of the total queries. Once our AI-powered search features are sufficiently refined, we will move forward with monetizations. With higher quality user products, we are seeing opportunities for future growth. Based on these factors, we think that we are reaching the low point of our advertisement businesses. We expect our ad businesses to gradually improve, with the first half of the year performing better than Q4, and the second half of the year showing further improvement over the first half. Thank you, Alex.
Thank you. Your next question comes from Gary Yu from Morgan Stanley. Please go ahead.
Thank you for the opportunity. So my question is regarding AI Cloud. Given the strong growth of your AI Cloud business this quarter, can we expect a continued positive trajectory going into 2025, and both in terms of revenue and also profitability? What are the main drivers behind this momentum? And additionally, could management share your outlook on the AI Cloud market in 2025? How should we approach enterprise cloud demand, and what incremental opportunities does AI bring to this segment? Thank you.
Thank you, Gary, for your question. So as Robin mentioned, our AI cloud revenue growth accelerated to 26% year-over-year in Q4, contributing to a full-year revenue growth of 17% in 2024. Notably, Gen AI-related revenue nearly tripled year-over-year in 2024. So this growth was fueled by rising demand for Ernie and our AI infrastructure, underscoring the market's strong recognition of our technological leadership. So as a result, we have successfully attracted a diverse customer base and built a robust pipeline of opportunities. So for the AI infrastructure, we have established partnerships across diverse sectors, including internet, automotive, smart devices, manufacturing, energy, finance, utilities, and lots of AI GC startups. Our customer base continues to grow healthily, with strong gains among both top-tier and mid-tier customers, demonstrating our expanding market share in China's cloud market. On the MaaS platform, Qianfan, it provides comprehensive foundation models with industry-leading price and performance. So we offer the Ernie family of models from flagship to lightweight variants, designed to meet diverse needs. And besides Ernie, we also provide access to a wide range of high-quality third-party foundation models, including DeepSeek's V3 and R1 models. Thanks to our full-stack AI capabilities and end-to-end optimization, we can ensure optimal performance and stability for any models hosted on our platform, while maintaining highly competitive pricing. So in addition to that, Qianfan provides a full set of tools for fine-tuning models and building AI-native apps, so that our customers can easily work out solutions catering for their own specific needs. So in terms of the AI cloud market, we believe it will grow rapidly in 2025. On one hand, during the recent Chinese New Year holiday, large language models became a widely discussed topic. This not only further increased public awareness of foundation models, but also encouraged more people to think deeply about how to leverage them to improve their own businesses. So on the other hand, we are confident that the performance of foundation models will continue to improve, while the costs will steadily decline. Surely, this will further lower the barrier to utilize these models. So as a result, we believe more enterprises will integrate foundation models into every aspect of their business operations, from R&D to production and to sales, which will drive explosive growth in API calls. Thereafter, we anticipate increased spending on Baidu AI Cloud, as we have observed a clear trend in the past that the consumers who adopted foundation models through API calls on our Qianfan MaaS platform also tended to increase their spending on our AI cloud services. On the profit side, our non-GAAP operating margin continued to expand year-over-year in Q4, as we focused on high-value opportunities that align with our strategic priorities, which drives sustainable, robust growth. So looking into 2025, we are confident that our AI cloud revenue growth will maintain strong momentum while continuing to generate positive operating profit. Thank you, Gary.
Thank you. Your next question comes from Zhang Wei from UBS. Please go ahead.
Hi, management. Good evening. Thank you for taking my question. I want to ask about our margin trend. So given the near-term headwinds in core ads and the increasing mix of cloud revenue, how should we think about the core margin levels in the first quarter and also full year 2025? Is there any room to further optimize our operating efficiency? And also, are there any investment plans for the full year that we should be aware of? Thank you.
Thank you, Wei, for your question. This is Jackson. So despite the near-term pressure, we remain optimistic that our strategic AI investment will deliver more sustainable impact. So we stay focused on improving resilience across all aspects of our business operations and see encouraging progress across our businesses. First, for our online marketing business, we expect our advertising revenue to gradually improve, driven by our plan to monetize our AI-generated search results at scale, and also our readiness to capture growth opportunities when the macro improves. Secondly, so for our AI cloud business, it has already demonstrated robust growth with continued margin improvement, driven by our growing market presence and the competitive advantage in our unique self-developed four-layer AI architecture and the full-stack AI capabilities. So we remain confident in maintaining this strong momentum going forward. Third, for our intelligent driving business, particularly robotaxi, Apollo Go, we remain focused on narrowing losses with better operational efficiency and improved UE. We are also exploring innovative operational models, including asset-led models. As you asked, for the investments and optimization in 2025, we will maintain optimal resource allocation to high growth opportunities while staying aligned with our long-term strategy. Our investments will continue to focus on initiatives that offer both tremendous future opportunities and strong ROI potential, including further advancing Ernie's capabilities, deepening the AI transformation of search, enhancing our AI cloud offerings, and expanding our autonomous driving initiatives. As we move forward with these initiatives, we remain committed to enhancing operational efficiency and fostering synergies across business groups to maximize the impact of these strategic investments. Thank you.
Thank you. Your next question comes from Miranda Zhuang from Bank of America Securities. Please go ahead.
Good evening. Thanks, management, for taking my question. My question is about the robotaxi business. Can management provide updates to the progress of the robotaxi business heading into 2025? What are the targets for fleet size, unit economies, and value proposition for our robotaxi business? What do you think the industry is approaching? Are we reaching an inflection point? And what's your view about the competition dynamics? As we are seeing that China's robotaxi competitors are leveraging ecosystem strategies with automakers and also ride-hailing platforms. So wondering what is Baidu's approach to compete and scale? Thank you.
Yeah, this is Robin. We've invested in autonomous driving technology for over a decade. We have turned our big vision into reality. Through Apollo Go, we established ourselves as a leading global player in autonomous driving technology. We operate in one of the most challenging environments globally. China's traffic conditions are among the world's most complex due to its massive population, diverse road conditions, dynamic traffic scenarios, and complicated urban layouts. The price for ride-hailing in China is about like 1/7 of that in the U.S. So our successful operation here demonstrates our exceptional technological and operational capabilities. We designed the RT6, our sixth-generation autonomous vehicle, from the ground up. It is the most cost-effective robotaxi vehicle the world has ever seen. With this strengths, we've successfully validated our business model and laid a strong foundation for further scaling and global expansion. In Q4, Apollo Go provided approximately 1.1 million rides nationwide. That's 36% increase year-over-year. And in January, the cumulative rides provided to the public exceeded 9 million. Furthermore, as I mentioned, we've achieved 100% fully driverless operations in China, which means that we don't have any safety drivers on the vehicles anymore. So this is a new industry benchmark, and it reinforces our leadership in this area. As I mentioned earlier, in November of last year, Apollo Go got the green light to start open road testing in Hong Kong. And this is an important step because Hong Kong is our first, right-hand drive and left-hand traffic market. It shows our ability to adapt our autonomous driving technology to different traffic systems, opening doors for expansion into other markets with similar driving setups. This year will be a paramount year for our expansion. We expect to grow our fleet size and ride volumes faster than ever. As we push forward, we also actively seeking cooperation opportunities. We have identified a variety of potential partners, including mobility service providers, local taxi companies, third-party fleet operators, and other potential partners. This asset-light approach will allow us to scale up efficiently while maintaining flexibility. By working with a diverse range of partners, we aim to strengthen our position in the market and bring autonomous driving to even more people. Looking at the broader market, as I mentioned in our last earnings call, since the market is still in its infancy, competition actually helps accelerate market development and foster a more friendly pro-innovation regulatory environment. And in this growing market, our mission remains clear, delivering safer, more convenient, and more comfortable mobility experience for more users. Thank you.
Thank you. Your next question comes from Thomas Chong from Jefferies. Please go ahead.
Hi, good evening. Thanks, management, for taking my questions. Looking into 2025, what will be Baidu's strategic focus for business investments? Specifically, how will resources be allocated across search, autonomous driving, cloud services, and foundation models? Additionally, what is management's outlook on full year 2025 capital expenditures as well as shareholders' returns? Thank you.
Thank you, Thomas. This is Jackson. So as we evaluate our capital allocation options in 2025, so our approach are guided by the following strategic considerations. So we will continue to invest in advancing our AI capabilities as a long-term strategic priority. So with that, we will further deepen the AI transformation across our product portfolio, particularly search. So in AI cloud, we aim to drive the adoption of our AI infrastructure, our mass platform Tianfan, and Ernie among enterprise customers, meeting their growing demand for AI products and solutions, as well as AI cloud services. In intelligent driving, so we are focusing on scaling domestic operations, exploring innovative operational model, and expanding our international presence, so while ensuring disciplined ROI management and effective loss control. For CapEx, two key priorities drive our decisions. So strengthening our technology leadership and accelerating the adoption of our AI products and AI cloud services across different sectors. So as you asked for shareholder returns, we repurchased over $1 billion since the beginning of 2024, which is significantly higher than our total buybacks in 2023. So in total, we have repurchased $1.7 billion under our $5 billion purchases program, which runs through December 2025. So going forward, we plan to accelerate our buyback program as part of our ongoing efforts to return value to our shareholders for their enduring trust and support. Thank you.
Ladies and gentlemen, that is all the time we have for questions. That does conclude our conference for today. Thank you for participating. You may all disconnect.